This is Andy with QualityStocks. Today's Thursday, March 31st, 2011, and today we're going to take a look at Griffin Gold. This is a NASDAQ Bulletin Board company trading under ticker GYPH. See, Griffin was holding a pretty solid support level right through here. I'm not sure what happened. I don't know anything fundamentally about this. Put together a pretty nice bounce from down around 13 cents up to near 19 cents. Yesterday on low volume, it closed up 3% again. We talk about this a lot of times. You look for the initial bounce, then the higher low, and another continuation move. So I want to take a quick look at these indicators and see if they're giving a sense that might be happening. You can see there was a bullish cross of the MACD. Of course, this sharp decline was during the price per share drop. Now we're getting a little trend back towards zero again. That's something that you want to see. Very similar look to the PPO. Also bullish cross. Also starting to trend back towards zero. The ADX is a bit suspect at this moment because you can see that the negative DI is actually starting to trend back upwards a little bit. Of course, they're pretty susceptible to whipsaws. They can move back and forth pretty quickly. But it's something to keep an eye on. We don't want to see this negative DI take off too far, or what will happen is the ADX will have to catch back up to it before you look for some sort of reversal. So what you look for now is see if this negative DI is going to turn down, the positive DI is going to turn upward, and then you look for the ADX to actually start to channel and trend upward. Alright, MFI is holding underneath 50. But you can see the longer terms, this gold line and red line, are starting to put together little uptrends to them. The 14 MFI, this red line, of course, the sharp move recently, catching back up to the sharp move from the 7. So you're just going to look for those uptrends to continue, and ultimately you want to see that break of 50. Accumulation distribution has kind of been a wedge. So you look right through there. So you pay attention to this, see if it's going to break through the bottom side, or if it's going to break through the upside. But right now, buying and selling pressure is appearing somewhat equal. And that's kind of reinforced through this Chaikin money flow, which is right now registering right around zero, telling you that buying and selling pressure are somewhat equal at this point. But you can see the Chaikin money flow trending back up towards zero. That's the positive sign. You want to see that continue, like see it bounce off this trend line, and then it move back above zero to show that buying pressure is dominant. CCI, this isn't really an accurate trend line because at this point, a valley hasn't been made. Somewhat neutral, but leaning towards the bullish side. You can look and see if this is going to continue upward. Ultimately, the buy point is break back through 100, but obviously it has to start trending that way in order for that to happen. So you look for this to continue, try and get on north side of zero in the first place, and establish this as a valley and a turn. The full still is showing signs of life, making its way back towards 50, looking pretty bullish, and right there trying to break through a trend line. You see how it's kind of had a channel going. Didn't just merely slide sideways through it. It's putting together a pretty nice move upward. We'll look for continuation there and try to see the break through 50 and get on the bullish side of things. See the tricks, looks like it's heading towards a bullish cross, and that's a lagging indicator. But when you're looking at those charts, the first thing we're looking for is the bounce, and then we're looking for a true reversal. And you'll see things like this right here. This is going to truly put together a reversal. This will make the bullish cross, start to trend back towards zero, and it'll be showing some real strength that makes it break through the top side of that channel. And in the overall perspective of things, that's the sort of thing that you look for. RSIs, nice and tight together, upward trend to them. You want to see that break of 50. Nice look to the RSIs. With this drop off through here, of course, you'd put a bottom support all the way down there at 12.7, but that's a little bit far outside of my typical parameters. I'd like to see this try and hold right through around this 15.3, 15.4 area. You can see coming back into here, 15 was a historic support level. For the last week, it's been trying to hold that. You can see it's bounced off of it as a little bit of resistance, moved through it. Plus, as I stated early on, you look for the bounce, then the higher low, and the reversal and the continuation. And what you want to see this next time is take out this 18.4, and that'll reinforce the idea this is going to start to trend back upward. This was a bottom. I don't know, like I say, I don't know what happened with this sell-off, but it'll show that buying pressure and sentiment's changing. In addition, that'll put it above the 200-day moving average, which is in a nice upward trend. It'll put it over top of this purple line, the 20-day moving average, and have it trending to the upper side of the Bollinger Bands. So there's some good reasons this is going back on the watch list, because this bounce reversal is a pretty common pattern. So if it can continue some upward movement, look for some resistance at 18.4. It's going to be a little bit more at 19 based on this area. And of course, the 50-day moving average always presents some resistance levels. So I'd look for that 20-cent marker to be a little bit of resistance. Static price per share resistance, though, I don't think will stiffen up until it gets up here near 21. There's a pretty solid support level that it fell through. When it finally dropped through that, that's when the hard drop came. And of course, that's pretty significant from where it is, from 16 cents all the way to 21 cents. And we never try and look at things as this is going to make some huge move and try and run to there. We look at it as the overall picture of technical analysis of making a move, candles defining themselves, finding support and resistance levels, allowing the indicators to continue their shift to trend and play itself out over a little bit of period of time. So right now, Griffin Gold is back on the watch list to try and establish this support level and to try and put pressure on this 200-day moving average and the resistance up around 18 cents. As always, merely my interpretation of the Griffin Gold chart. This is Andy with QualityStocks. Thank you for watching and trade smart.